When most people start thinking about buying a home, they usually focus on two numbers: the down payment and your monthly mortgage payment. And while those are obviously important, they're only part of your financial picture. Because the reality is this: there are several other costs that come with buying a home and owning a home that many buyers don't fully understand until they're already deep in the process. My goal in this video isn't to scare anyone out of homeownership. In fact, I'm a huge believer that owning real estate is one of the best long-term wealth-building tools available. But the buyers who succeed long-term are the ones who understand the full financial picture before they buy. So let's walk through some of the hidden costs of buying a home that many people tend to overlook. First up, your closing costs on closing day. The first big surprise for many buyers is closing costs. Everyone talks about the down payment, but closing costs are separate from that. Closing costs include things like lender fees, title work, transfer taxes, recording taxes, escrow setup, and several other administrative items that are part of completing the transaction. Depending on the loan type, the price of the home, and the lender you're working with, closing costs can vary quite a bit. Sometimes they might be just a few $1,000s. Other times, they can be significantly higher, guys, often ranging from 3 to 5% of the purchase price of the home. Certain loan programs have different fee structures, so the type of financing you choose can impact what those final numbers look like. This is why having a great lender walk you through a detailed estimate early in the process is incredibly helpful. Next up is home inspection costs. Another cost buyers often don't think about until they're under contract is inspections. A standard home inspection on a single-family home or a townhouse might cost somewhere between $400 and $600. Depends on the property and the tests recommended, but inspection costs can quickly climb. You can have radon testing, termite inspections, septic inspections, well water testing, pool inspections, chimney inspections, lead inspections, and several other specialty inspections that can push that number anywhere from $400 to well over $2,000. Here's something important to remember. A home inspection is essentially a snapshot of one day. The inspector is evaluating the home based on what they can see at that exact moment. They can't see what happened 6 months ago, and they can't see what's going to happen 6 months from today. So while home inspections are incredibly valuable, they're not a guarantee that nothing will ever go wrong. So we must budget accordingly. And I can assure you, something's going to go wrong. They simply help buyers understand the condition of the home at that point in time. Homeowners insurance. Insurance has become a much bigger factor over the past few years. Premiums have increased exponentially in many parts of the country, and location plays a huge role. For example, the more rural a property becomes, the more it can fall into higher insurance tiers, depending on things like how far am I from a fire station or fire hydrants. That can increase premiums in ways that buyers really never expect. So getting insurance quotes early in the process is incredibly important when evaluating your affordability. Now let's look at those property taxes. Property taxes are another cost that vary widely depending on location. So here in Harford County, for example, homes inside certain municipalities can carry higher tax rates than homes located outside of those areas. Even if we look county by county, Harford County, Baltimore County, Cecil County, they have different tax rates. Tax rates can greatly affect your monthly payment. Two homes with the exact same purchase price can have very different monthly costs, simply because of how the property taxes are structured. Understanding those differences ahead of time helps buyers avoid surprises later. And then, of course, owning a home. We have maintenance and ongoing repairs. One of the biggest financial differences between renting and owning a home is maintenance. When you own a home, everything eventually becomes your responsibility. There's no more landlord to call. Furnaces don't last forever. Water heaters wear out. Roofs eventually need replacement. Light fixtures, plumbing fixtures, appliances, and mechanical systems, they all have lifespans. A good rule of thumb many homeowners follow is setting aside a percentage of their income each year for maintenance and repairs. And some years, you might not touch it. You have no need to spend the money. And other years, it's going to catch up to you. But having that reserve creates stability when things inevitably break. And let's get into the first year surprise costs. The first year of home ownership can also come with unexpected expenses. Sometimes buyers move in and immediately want to make small improvements. Maybe it's painting, replacing some fixtures, updating a few appliances. Other times, something unexpected just shows up. A sump pump fails during a heavy rainstorm, or a minor plumbing issue appears. Maybe an appliance decides it's time to retire. These aren't necessarily signs of a bad house. It's simply part of owning a home. And I can assure you, something is going to break the first year. I swear it's written in the stars. Planning for those possibilities is one of the best ways to make home ownership enjoyable instead of stressful. And let's not forget about moving day and setup costs. Another cost buyers often forget is simply moving into your new home. Moving trucks, utility deposits, new furniture, window treatments, lawn equipment, and other setup items can add up quickly, especially if it's your first home. Even small things like changing locks, installing security systems, or setting up internet service are part of that transition. Individually, they all may seem small, but together they can create a meaningful upfront expense. So let's step back and look at the big picture. The goal of understanding these costs isn't to discourage anyone from buying a home. It's quite the opposite. When buyers go into homeownership with a realistic financial plan, they tend to enjoy the experience much more. They're not surprised by normal homeowner responsibilities, and they're better prepared to handle the occasional unexpected repair. Over the long term, owning a home still remains one of the most reliable ways many people build wealth. So, in closing, if you're thinking about buying a home, don't just focus on the down payment and the mortgage payment. Let's look at the full picture. Let's look at your closing costs. What kind of inspections will we need? The insurance costs. What are the property taxes? And budget for ongoing maintenance. The realities of owning a home long term are this: it's going to cost money. Because the buyers who understand those costs ahead of time are the ones who step into homeownership with confidence. That's always the goal. So if you're thinking of buying a home, head over to www.chgworkshops.com and sign up for one of our free, no obligation home buying workshops. Hey, thanks so much for watching this video. Please take a second, like and subscribe to our channel. And if you're interested in more tips and tricks, check out this next video.